Hello, and welcome to this week's edition of Tax in 10 with me, Rachel de Souza, and Andrew Robbins. We're both tax partners in RSM's London office, and we have a wealth of experience in dealing with a wide range of private client matters. Your feedback is valuable to us, so do keep it coming, especially if you have thoughts on any topics you would like us to cover.
So this week's subject is actually the direct result of one of our regular listeners giving us a suggestion. So thank you very much to Caroline Hulse, who suggested that we might like to talk about furnished holiday lettings. This particularly struck a chord with me because when I recently visited family in Cornwall, I heard that a lot of local properties are being taken off the long-term rental market and instead of being turned into short-term holiday rents on Airbnb. And this begs the question as to why is it that furnished holiday lets are an attractive option for people to explore at the moment?
Oh, come on, Andrew, isn't it obvious? There are reports of shacks in Cornwall going for £10,000 per week. So aren't your local countrymen just trying to take advantage of the rest of the population who are unable to get away on a foreign holiday?
Well, absolutely they are, I'm sure. And it is true that the creation of the short-term letting industry online means that you can potentially make a lot more money renting for short periods than you can for having a tenant all year round. So we know that holiday lettings are quite a hot topic for a lot of our clients, partly for that reason. But what do we actually mean by a furnished holiday letting property in the first place? And why is it a good thing from a tax perspective? So let me kick off with this just by giving us a definition. And furnished holiday letting in tax terms just means that you meet some specific rules, with the main ones being that the property is available to rent for 210 days in the tax year and is actually rented for 105 days. In addition, the property can't be rented out for big slabs of time to one individual. So let's assume we meet those conditions, but if we do, what are the benefits compared to ordinary rental, Rachel?
Well, the starting point is that furnished holiday lets are treated for tax purposes as a business, whereas ordinary rental is treated as an investment. Businesses, of course, get lots of additional tax breaks. To start with, one of the biggest ones is if you borrow to buy a rental property, interest relief is capped at 20%. Whereas if you buy to borrow a furnished holiday let, you can get interest relief up to your top marginal rate of income tax. So in other words, at 45%. So there's a huge finance cost advantage. And then because it's a business, when you sell your property, you may qualify for BADR, that's business asset disposals relief to you and me, and the old entrepreneurs relief to anyone else. So you could pay tax at 10% on capital gains rather than at 28%. But there's more. Furnished holiday lets also qualify for business rates rather than domestic rates. And this is an area where we have seen signs of abuse in the past, with certain people claiming that their second homes are furnished holiday lets in order to qualify for lower rates, and local councils have in fact been challenging this in certain circumstances.
Yeah, I think there's been some dodgy comments out there about how you can save on rates by claiming to be a furnished holiday let, and some of that I think is a bit leaves a bad taste in the mouth. It's probably worth mentioning as well that for non-residents with UK property, reporting for holiday lettings is much simpler than for ordinary rental because you don't have to sign up to the non-resident landlord scheme in order to get your rent paid gross. There are also, I think, a number of other sort of more technical advantages of furnished holiday lets that I won't bore you with here, but which do tend to give holiday lettings more tax relief and make it easier to prepare accounts for them compared to a straightforward rent. Now, I'm conscious that we haven't yet talked about the inheritance tax position for furnished holiday lets. And if I'm honest, I've kind of put this off because it's quite a tricky area, but potentially your furnished holiday lettings could be exempt from inheritance tax on death if it qualifies for something called business property relief.
Okay, so from what you've just told me, I would have thought it was obvious it qualifies. So why wouldn't it?
Mainly because there's lots of tax cases in this area. So if you can show that you are running a business, then business property relief is available and there's no IHT on death. But as you can imagine, HMRC absolutely hate this. And we do regularly see cases where they challenge whether or not the letting is being run as an active business rather than being run as a passive investment. And the reason why this is tricky is because if you look at the cases, they go both ways. The taxpayers win some, HMRC wins some, but the bar is set quite high. And if you want to get that business property relief and the IHT exemption, you are going to have to do a lot more than just change the sheets once a week. Still, it is, potentially it's a really valuable relief. If you've got your holiday home, which qualifies as a furnished holiday let, and you can take the whole value of that outside of your estate, for a lot of people, that's a big chunk of their wealth suddenly freed from IHT. And it's absolutely not something that's available for an ordinary rental.
Very true. So up to now, we've been talking about the situation when you qualify as a furnished holiday let. But what's the position if you don't actually meet the day count tests, but still only let on a furnished holiday style basis? I think the first thing to say is that the rental income is, of course, still taxable. And individuals need to be very careful because previously there was a relief that was called rent a room, and that used to exempt short-term income. But this no longer applies unless the owner is actually occupying the property at the same time as the tenant. And of course, in most of these cases, that's simply just not going to be the case. Now, there can also be a knock-on impact on your CGT position, and you will need to keep quite a close eye on whether you would qualify for full principal private residence relief when you sell the property if you were doing, sort of semi, furnished holiday lettings. The other point is, don't think you can slip under the radar with rental income either. HMRC are well adept at combing online agent sites to check what property is being rented and marrying up this information with the land registry information to find the owner. And remember, HMRC and Airbnb did a deal whereby all UK hosts' details were passed to HMRC for the 2017-18 and 2018-19 tax years. So HMRC have got a pretty good idea, certainly if you use Airbnb as your hosting site. So having said all of that, why would anyone not do a furnished holiday let?
I think it's a really fair point. And as I said at the beginning, anecdotally, from my experience in Cornwall, there's a suggestion that lots of people are thinking in just that way and are turning to furnished holiday lettings in a much bigger way than in the past. That actually might create social problems, because in places like Cornwall, where you have local populations who are actually quite poor, if you're taking away part of the rental property market, you're actually pricing those people out, and there is nowhere then for them to live. Because economically, if you can make more money and pay less tax with the furnished holiday lettings, then why on earth would you rent to a full-time tenant? So given that, and given the fact that HMRC really don't like, especially the inheritance tax benefits of furnished holiday properties, this could well be an area where there is further review and change, even though HMRC did have a look at it in 2010, which is when the sort of the day count requirements and so on came in. So at the moment, furnished holiday lettings, if you can qualify, is kind of all round a good thing. But I do wonder whether we might see some change later on.
Well, I think I need to get myself down to the estate agents and get one of those properties pretty quickly, because it seems to me that it's too good of a tax wheeze to let pass me by. So anyway, on that note, what have you been reading or watching or whatever it may be? Have you got a recommendation for us?
I do, something a bit different this week. It's a book called Guns, Germs and Steel by Jared Diamond, and it basically asks the question, why is it that European countries ended up having the Industrial Revolution and colonizing the world? Why wasn't it places like China, for example, which had civilizations that were very advanced a long time ago, or Meso or South America, again, very sophisticated, long-lasting civilizations? Why did Europe end up colonizing and becoming the great power? Absolutely fascinating, really interesting. He's a journalist, so he writes in a very approachable way. And as a history and geography and politics and all sorts of stuff all thrown in there, really interesting read and worthwhile. So Guns, Germs and Steel.
Wonderful. I'll have a look at that one. And thank you for listening. Please do let us have your comments and feedback, as we do act on them when we can. As you know, we can be contacted on rachel.d'Souza@rsmuk.com and andrew.robbins@rsmuk.com. Bye for now.
Bye.